Hello everyone, welcome back to the channel. In this video, I am going to solve 2016 examination problem which is related to income from house property. Let's solve the problem. Okay, see the problem. From the following information, compute annual value of house property for the assessment year 2016 and 17. Municipal value, they given 1 lakh rupees. Fair rental value 1,80,000. Let out per month rupees 16,000. Standard rent rupees 1,20,000. Unrealized rent for 1 month. Municipal tax paid by the owner of house property rupees 20,000. Municipal tax paid by tenant rupees 10,000. So we have to identify net annual value of house property. Okay, in this problem we have to identify net annual value. To identify that, first we have to identify gross annual value. So step number 1, municipal value, how much they given? 1 lakh. Fair rental value they given 1,80,000. This whichever is higher, that amount we should consider. So in these two amounts, higher is 1,80,000. 1,80,000. So this will be a notional rent. Step number 2, notional rent 1,80,000 we identified already, or standard rent given in the problem 1,20,000. These two amounts, whichever is lower, that amount we should consider. So lower amount is 1,20,000. 1,20,000. So 1,20,000 is expected rent. So third step, expected rent or actual rent. So ER, expected rent 1,20,000 we identified. Actual rent AR, actual rent. To identify that actual rent, we have formula. Formula is annual rent minus unrealized rent. So annual rent we have to identify. So per month rent they given, that is 16,000 per month, means for 1 year how much? So you will get 1,92,000 will be your annual rent. So annual rent minus unrealized rent. Annual rent 1,92,000 minus unrealized rent they given in the problem 16,000. If you deduct, you will get 1,76,000 will be your annual rent. In this, whichever is higher. So whichever is higher, So 1,76,000 is your higher amount. This will be your gross annual value. So what we have to identify? We have to identify net annual value. So net annual value is equal to gross annual value minus municipal tax paid. In this problem, the given municipal tax paid by the owner as well as municipal tax paid by the tenant. We have to consider municipal tax paid by the owner. So 1,76,000 is gross annual value minus municipal tax paid by the owner 20,000. If you do that, you will get 1,56,000 will be your net annual value. So to remember this format, I'll tell you one trick. So step number 1, MF, that is municipal value and fair rental value, whichever is higher. Step number 2, NS, that is notional rent, standard rent, whichever is lower. Step number 3, EA, expected rent and actual rent, whichever is higher. So MF, NS, EA.